labeled it Steering Through Uncertainty, Advancing Carbon Markets. And we're sort of at an inflection point now. I think there was a remark made earlier to that point. But we are facing these challenges, particularly as it pertains to the ambiguity around the corporate carbon credit use, Dirk, and as well as delays in those negotiations around Article 6. But there have also been these significant efforts in the last few years where we've sought to clarify as well as to strengthen the landscape of the carbon markets. And in this session, Dirk and his panelists will now be exploring how the market's adapting to some of these developments, of course guided by that report that Dirk was talking about, which has been compiled by the latest insights really from the World Bank report, which is titled The State and Trends of International Carbon Markets. We'll also get perspectives from leading market intelligence providers and experts. So you can now introduce your panelists, and I wish you a fruitful discussion.
Fantastic. Thank you. And why don't I ask my panelists to start making your way up here. I'm going to be joined by Guy Turner, who is the Global Head of Carbon Markets at MSCI and one of the leading analysts for quite a while in the world of carbon. Then Alex Procton, Manager of Data Solutions and Insights at the Ecosystem Marketplace, the group that I think has the longest history of bringing us good data on what's happening in voluntary markets or verified markets, as we're beginning to call them, as well as the nature-based side of things. Maria Benzoni is with us from, who is the carbon market data lead at Allied Offsets, again, a leading analytical firm and data firm in London. And then finally, Hanya Dawood, who is the practice manager of climate finance and economics at the World Bank. And the way we're going to run this session, Hanya we're going to build up to Hanya to give us the big release of the State and Trends International Market Report. But in so doing, we'll start with Guy, Maria, and then work our way to Alex before Hanya presents. And I think all three of your organizations have been involved in providing inputs into the report, so we'll get a few insights of their recent research that's sort of supplementing this new report, and then Hanya will give us the overview. I'm going to try to reserve 15 minutes for audience Q&A, so I hope you'll write down your questions. There will be roving microphones so that we can involve you guys in questions for the panel. Softball questions are always welcome, but also if there's a piercing question, Guy is here. So, no, I'm kidding. We'll have room for those as well. So, Guy, kick us off here. It's like in terms of the research that you've been doing, some really, I think, interesting look at some of the challenges in voluntary markets and trying to test out how true they are, but also bring some perspective as to how they fit in the grand scheme of things. Give us a couple of key insights from what we're going to see in the reports.
Yeah, okay, thanks. So for those who don't know, MSCI is a very large global financial data company, and they acquired my own company last year, Trove Research, and we've spent sort of well over 3 or 4 years analyzing this market upside down, sideways, and any which way you look at it. And the thing that I come back to time and time again is the sheer logic of an emissions market, be it a compliance or a voluntary market. When you look at the costs of decarbonizing the industries that need to be tackled, you're looking at a cost of between $300 and $600 a ton to do that in many of the industries. At the high quality end of the carbon credit market, the offset market, you could be looking at $30 to even $100 a ton. You've got nearly a 10-fold difference in the cost of decarbonizing some of these industries. Now, these industries do need to do that, but in the shorter term, the logic of how best to use scarce capital and scarce resources makes absolute economic sense. And the number of companies now making statements on climate net zero targets is rising. We calculate by 2030, if you add up all the commitments and you project them forward to where they're likely to be, to where the targets are, we're going to be about 10 gigatons off track. That's about 20%, including scopes 1, 2, and 3. That's about 20% of world greenhouse gas emissions. You've also seen, after the goodwill period of COP26 in Glasgow and all of the companies falling over themselves to sort of say, actually, we have a higher purpose here rather than making money, that goodwill is sort of dissipated a little bit, and the shareholders, the asset owners, the asset managers are now starting to focus back on profit, dividends, and the climate is sort of slipping down the agenda. And one of the sort of things that we need to do as an industry, I think, is put climate first and foremost back up the agenda and double down on the sheer logic and economics that if these companies are going to make a serious attempt at hitting those targets, and shareholders should hold them accountable, not just the public, shareholders should hold them accountable, they are going to need markets to do it because they just do not have the resources to invest in their own businesses to make those cuts in the time they had. And the good news from the sort of the circularity of this market is there's this chicken and egg. Well, what about quality, and can we be assured that what we're buying on the offset market is delivering what we want? The concept of an emissions market is not in question. It exists. It's perfect. It actually works incredibly well. In Europe, the EU ETS trades well over $500 billion a year. No one questions the concept of if I buy a right to pollute from somebody else, can I use that myself? No, that concept is utterly understood. The problem in the VCM is, do we really trust that ton that I'm buying doing the same job that I am actually emitting? And if we can solve that, so it's not a conceptual issue, it's one of measurement and it's one of accuracy. And if we can get those methodologies improved, if we can get the standards up and we can ensure that that ton is a ton, then there should be relatively little concern about, can I trade this asset rather than just do it myself? And the good news is it's happening. When you look at the prices of forward contracts, so we track a whole range of prices in the market, both OTC on exchange, both in the spot market and in the forward market. And you look at the prices in the forward market, they're well in excess of what the spot market is trading at the moment. So that is indicative of the higher quality of the newer projects coming through. And that is just a time process we have to sort of bear with. Hopefully we can accelerate it. And the new projects are much more assured, higher quality, and will deliver sort of broader benefits. And then you will sort of go from a vicious sort of downward cycle of, can we trust it? No commitment from companies, can we trust it? To sort of reversing that to higher quality, more commitments, higher quality, more commitments.
So this piece that you've kind of brought to the fore, you started off with, I got a preview of the report. You guys will get to see it a little bit later. But the number of companies that are just missing their SBTI targets, pretty phenomenal.
Yeah, when you include scope 3, it's huge.
So it's urgent that we turn that around.
Yeah, reducing emissions is really costly. It's hard, and we need to use all tools at the disposal globally to do that. I think as an economist, I think it doesn't make a lot of sense to sort of narrow down and say that particular entity has a responsibility to deliver that reduction. Let's broaden the pool, let's broaden the range of opportunities, and then you get much, much better bang for your buck.
Maria, I'm not skipping you, but I'm going to go to Alex next. And another stunning little piece in there, maybe it's not all that stunning, is kind of what the numbers are showing on voluntary markets. A few years ago, we set out to scale them, but we haven't actually scaled them in the past year. Can you give us a little preview of what we're going to find in the report on that and your recent analysis at Ecosystem Marketplace?
Yeah, absolutely. Thank you, Dark. And so at Ecosystem Marketplace, for almost 20 years, we've been surveying market participants, primarily project developers, resellers of credits, investors, as well as exchanges, to directly capture their data on transactions that happen in the market. And so, as Dirk alluded to, basically, we began to scale up carbon markets and really saw the peak of that success so far in 2021, when the volume reached so far an annual peak, and the total value of the market was almost $2 billion. Since then, each following year, we've seen the volume of transactions in the market has fallen by about half. But what has happened at the same time is that prices increased, and there have been different dynamics for different project types and different quality indications in the market. So what we found in 2023, when we analyzed the data from 2023 in our State of the Voluntary Carbon Market report, which was one of the data points that we contributed into the State and Trends report that is going to be published after this session, we did see that volumes continue to fall, but we did see that, depending on the category, that some volumes are increasing, that some prices are increasing. And really for 2024, it's too early to say, because the bulk of purchasing of carbon credits happens in the last quarter of the year and the first quarter of the following year, in order to cancel out any sort of emissions that companies choose to offset. And that's not possible until they've completed their greenhouse gas inventories. But what I would say looking forward is that there were multiple factors that led to the decline in the volume of transactions in the market. There were factors that were outside of the carbon market itself, so economic headwinds that affected many different markets beyond carbon markets. There were also these issues with quality, questions about project integrity that the market has started to address. And so I think that it would be difficult to see all of these forces impacting the market in 2024 in exactly the same way that they did in 2023 and 2022.
Great, thank you. Maria, now I am going to come to you. At Allied Offsets, I know part of what you guys have looked at is the trends around sort of market appetite for reductions, removals, avoidances, et cetera. Tell us what you found, what insights, and what should people look for in this report, that the insights you've gained.
Yeah, sure. Thanks for having us. At Allied, similarly to what Guy mentioned, we're trying to look at the VCM from any possible perspective and to track it in its most comprehensive sense. So that's why we looked a bit at also the trends in avoidance and removals for this report that I'm excited to look at once out. Regarding the differences in trends, maybe if we start from pricing, the most key fact is probably the staggering difference in prices between removals and avoidance. Avoidance still dominates the market in terms of volumes, but prices in the removal subset are way higher than avoidance, obviously due to the higher cost of these projects. And interestingly, also if we look at MBS removals, which are only a part of the removal subset, they still carry a high premium compared to avoidance projects. And then when we go into looking at tech-based removals, so all of our DACs and BECs, they still trade at way higher than both the MBS removals and avoidance. The only reason why we see, on average, if we look at weighted averages for CDR sector, so tech-based removals, the prices came a bit down. That's only because of the new increased interest in biochar projects, which tend to trade a bit lower than the DACs and BECs. Then if we look at offtakes, they still play a huge role in developing the CDR technologies. They're obviously very important for the possibility to scale up these technologies. And we've seen in the past years, and also in 2023 and beginning of 2024, they've been led by large tech companies. So for example, with the Alliance of Frontier or Microsoft. But also interestingly, we've seen this year that some public governments have started gaining interest in supporting these new technologies. So for example, we've seen the large investments from Denmark and from the Canada Fund in BECS and carbon capture projects, which is a great signal for the developing of these technologies, I would say. And then finally, we looked a bit at what might happen with the development of the Article 6 framework. within this, for these trends and how this might shift. And there hasn't been much clarity yet regarding the possibility to include CDR technologies, so the tech-based removals technologies for the CDR framework. But there is hope that they will be part of it, as we've seen. ICVCM is assessing isometric and Puro as CDR registries to be allowed to issue CCP credits. And similarly, also some compliance schemes are considering the possibility to include CDR projects for their compliance purposes. So there is hope, and the other thing is that probably with these many quality metrics, as Guy was mentioning, flooding this space, it's not going to be the distinction between avoidance and removals that really drive the demand for specific projects, but we think it's mostly going to be the overall quality of these projects. And that's why we are trying to look in these past months at developing tools that allow to compare all these different quality metrics to be the most comprehensive possible. So that we can kind of start looking at what's the actual quality of each project rather than is it an avoidance, is it a removal project, because that's what we look for in the end.
Thank you, and thanks for bringing up the points about kind of how some of those uncertainties, particularly around Article 6 and how some of these different asset classes are going to be treated, for bringing that out a bit. So through these three sets of inputs into the research, Hanya, we got a picture of a market that's kind of taken a pause given added uncertainty over the last 2 or 3 years. We're working really hard to restore some of that certainty together. Institutions like the World Bank and other MDBs, along with governments and those of us in the private sector. But it's time for the big reveal about the report and what you guys have actually found. So I'd love to pass the floor to you, Hanya.
We can get the slides to work. There we go. All right, so that's the grand reveal. So if you want to take a quick photo of the QR code, and we'll post it up shortly as well. So I hope many of you here are familiar with the State and Trends of Carbon Pricing report, which is our flagship that we've been publishing for over a decade right now. And as many of you here know, at the World Bank, we really take an approach to Paris-aligned carbon markets. And we work with our client countries across the spectrum, from compliance markets, the big game in town, domestic carbon pricing instruments, ETS systems, taxation, a lot of work with our friends from ICAP as well. And given the growing interest and the growing potential for international carbon markets, we, as of last year, started publishing what we call State and Trends of International Carbon Markets. And the second edition is live as of now, and we're partnering with MSCI, Allied, and Ecosystem Marketplace, and leveraging the good data that they have. And really the goal is to synthesize crisp and short messages that focus on key developments. And this year, really, the focus is on bottlenecks. And our hope here is to elevate some of these issues and these bottlenecks at the leadership level so that they're discussed in fora to help unlock the promise and the potential of carbon markets. So I'll briefly go through the key messages of this year's report, and we have 6. So the first message is on the end-to-end integrity framework. So last year during COP, there was a lot of enthusiasm around various entities, ICVCM, VCMI, SBTI, GHG protocol, coming together to set up this framework for end-to-end integrity. And there has been progress, but the impact on the market is not yet evident. And on the supply side, the positive development is that the market is coalescing around core carbon principles, and supply is slowly developing as these principles are operationalized. On the demand side, the elephant that everyone can see in the room is the use case on, by corporates. And I think here the use case is simply not clear. We hear that over and over again in every one of these conferences. And VCMI here has made some practical suggestions around Scope 3 flexibility, around which broader stakeholder engagement could unlock the voluntary carbon markets for Scope 3 mitigation. This is, of course, all good, but we think we need to see where the puck is in the next 1 to 5 years, and this takes me to the second and third message around country policy frameworks and capacity building. The bottom line is there still isn't uniformity around optimal or even minimum policy frameworks that are needed at the country level to govern carbon markets activity. Some countries have some form, decrees, guidance, legislation. We've mapped 16 jurisdictions that have such frameworks. Ghana and Bhutan stand out as good examples. And we need to scale these up. And these frameworks should also consider the role of the international private sector, potentially through the VCM initially and shifting towards compliance. And to your point, Dirk, I mean, we see this as a sandbox to experiment that could be an on-ramp for future compliance markets, which might take a little longer to develop. And of course, around this, there needs to be capacity building at the country level, which brings me to my third message. So what we found in this year's report is capacity building efforts are emerging, but it's a very fragmented landscape. We've mapped together with our partners from I4C in Japan about 50 capacity building initiatives, but countries are still confused about how to utilize and how to tap into carbon markets. So clearly there's an issue. There's an issue here, and there needs to be standardization or at least consensus around the basic decision-making framework around engaging in carbon markets. And what we note in the report is there really is an urgent need for key partners to come together and work towards harmonization. And for us at the World Bank, we're hoping to work with Article 6 Implementation Partnership, the UNFCCC, and GI to make some progress in this area. The fourth message that we find is around the legal nature of carbon credits, or the lack thereof. Investors, of course, need clarity on what's the asset, what is it, can it be collateralized, can it not? Brazil and Egypt have made some progress here, but we're nowhere near where we need to be to have a common understanding of the legal nature of carbon credits. And here, we've convened a working group with UniDroit, and there are other efforts to try to bring in some private law principles to bring clarity to this area. And lastly, well, not lastly, before lastly, on carbon market infrastructure. So the Paris Agreement puts the onus on countries to figure out their market infrastructure, and this has resulted in a fragmented ecosystem with different approaches to issue, track, and account for carbon assets. And there needs to be harmonization with minimum service standards on things such as KYC, money laundering, anti-bribery and corruption, and cyber security to strengthen financial integrity. And here, we're working closely with partners in the ecosystem, including Expansive and S&P, among others, to flesh out a roadmap which we hope to launch around COP, with guidance on these issues over the coming 12 months. Last but not least, on financial product innovation, we're seeing some interesting carbon-linked instruments in the capital market. The World Bank has been involved in two. Some insurance products are also emerging to mitigate risks that are esoteric to carbon markets. MIGA which is the insurance guarantee agency of the World Bank, is working on an insurance product focused on corresponding adjustment risk. But as Martin from CAM yesterday said, let's not over-innovate. Let's just get the market right. And if at a minimum we can get a contract that can be securitized and collateralized, a la a PPA, a purchasing power agreement, then we'll already come a long way. So that's in sum the highlights of the report. We'll leave it to you to read at your leisure. We tried to keep it very focused and concise. And as I mentioned, we're working with players across the ecosystem to try to bring together all these moving parts. And the goal ultimately, to my second message, is to really get countries to set up the frameworks that are necessary to play in these markets.
Great. Thank you, Hanya. And it's first of all, remarkable how much overlap there is of these themes in the conference program here. I know that's due to hard work by a lot of people in sort of making sure that that we're exploring the topics that are emerging as important for people that are trying to put money to work in these markets. And this can provide a great touchstone. Guy, you'll go back with me probably to the years when I do remember when I first started this job 12 years ago, believe it or not, but that we had discussions about whether it was time to turn off the State and Trends report because the news was so bad. It was like the State and Trends were just going in the wrong direction. And I think you guys made the right call with urging from some of us in the market that it was going to look really good someday to see how it all came back, and from the depths of despair to good places. And if you look at the compliance side of it, it's stunning. Yeah. It's stunning right now where we are, and with a second ETS coming in here in Europe, the amount of emissions coverage, with China thinking about expansion to other sectors, with I know there's a session or two here on new emerging markets and carbon. We are at a pivotal juncture and ready, poised for growth. Okay, we do have time with the panel's indulgence to take a few questions from the floor. So I'd love to see a couple of hands and we've got people running the microphones too, I think. So I see the first brave soul right up here. The mic is on its way. And by the way, if you don't ask questions, I, as moderator, am allowed to ask people in the audience to, I can put you on the spot, or I can ask my own questions, as you prefer. Please, start us off and give us your name and affiliation.
Well, hello, I'm Marcos Neira, and it's been like a common topic, the transparency behind the carbon market, the credits, and I thought that apart from maybe an harmonization of the regulations, that I think that it is obviously needed to ensure the quality of those credits, but also I think that in order for the enterprises and the stakeholders to know that those credits are surely of the quality of that they think that they should be, maybe the technology, the blockchain technology would be useful so as for not only the enterprises to know that it is a quality credit, but also for us, the consumers, if you want to know that that enterprise is not just greenwashing and the credits that they are buying are not as good as we think they are, but also for us to ensure and to get to know that those credits really do have an offset and they are really good for the environment. And I think that maybe in that sense, technologies such as blockchain, obviously the harmonization of all the regulations may be really useful in that sense. I don't know if it's already being done. I don't know if it's actually possible, but it's just an idea that came to my mind.
Absolutely. Hanya, do you want to say a couple of words? Because I know that transparency, it actually cuts across more than one of the topic areas, but also quite a bit to the work you guys are doing in digitization and with the CAD Trust.
No, absolutely. So, I mean, there's no question that the emergence of new technologies, blockchain, digital MRV can help improve the transparency of the markets. We didn't mention it as a key trend. I think we have some good anecdotes, but is it really a force that's impacting the market? We don't see that just yet, but you may have heard Mr. Qadar this morning from COMESA talk about the digital MRV system that we're working with them on. And we think that this is really going to help with establishing clearer baselines and with much more transparent emission reduction crediting once the project starts generating credits. I mean, similarly, satellite imagery with the government of Bhutan, we're leveraging that technology to create, forest maps. And, there are many companies, Pachama and others that are engaged in this space. On transparency for double accounting, one of the initiatives that we're working on with Dirk and the government of Singapore is the Climate Action Data Trust. That is a metadata layer that surfaces all data in voluntary carbon markets right now, although we've actually also captured the CDM projects on the Climate Action Data Trust. And it's secured on the blockchain and actually can allow for checking for double counting. So certainly a lot of potential, and we hope to see these developments make a real impact in the market in the years to come.
And I do think this is probably by next year we'll be able to say it's a trend as more registry systems adopt blockchain type solutions and bring greater transparency. So I think it's a direction of travel for the market as a whole. Okay, let's take another topic, please. We got 2 hands up here and then one over here, so that's great. That's going to get us to lunch. I'll take these. Let's start right over here. We're going to start with ladies first, then come to you, then over here, and I may have missed one. Please.
Thank you. I'm Nga from Vietnam. I'm good for GIZ, and we also in Vietnam support to develop the carbon market, carbon exchange. So this is very interesting to hear about the report. And you mentioned about the fragmented infrastructures in the report. I'm not sure if in the and you also think about the minimum standard, something like that, need to develop. Because in developing country, we are now in the process of establishing. So it's good to know which direction we should head in order to be aligned with the future. So it means that when we convert into one or some kind of standard, so is there, and can you give an advice in which way or what reference we should use in our development process? Thank you.
Thank you. Who wants to take this? Hanya, do you want to? I mean, on the registry front, it's certainly that is the work of the Climate Action Data Trust, is to try to get a data model that different service providers that offer registry services can use so that they all talk together and so that you've got an ease in identifying double counting. That's sort of the holy grail of that program. But it's not the only area that standards are coming to play. I know Guy wants to come in here. Why don't I go to Guy and then back to you, Hanya, if you want to add to that. Guy?
Yeah, I mean, I think it's quite interesting when you look at the World Bank sort of map of compliance markets and sort of emissions trading schemes around the world. They do fall into two sort of categories. There's the cap and trade model, which Europe, California has sort of pioneered very successfully. But those are really for sort of rich countries. They find them easier. So you need 2 things. You need to be able to set a target to reduce your emissions, you need to have the confidence that whatever the price is going to be, that those targets are going to be met. And back in the day, Dirk, you remember when we all started sort of getting rather worried in Europe when it went to 30 euros a ton back in sort of 2010, and we didn't think it could go farther. Now it hit 100 euros a ton. And when you set a cap, you do not control the price. And so for developing, sort of less developed countries, that becomes sort of slightly awkward. So what's the alternative model has been a sort of tax and trade system where in Colombia, Indonesia, sort of other countries in that sort of bracket, they can set the tax, the carbon tax, the climate tax, and carbon credits can be used as a means to offset that tax. And that gives some certainty over the fiscal sort of structure of the system and also includes the market element as well. But it's a lot more manageable, it's a lot more controlled. And a number of countries are sort of playing and looking at that design. And then you've got then you've got decisions around, well, what proportion of the tax could be offset by the credits, what type of credits, what quality criteria, etc. But that's sort of, I think, the first sort of model that sort of new countries coming into these sort of schemes sort of are sort of starting to look at.
Hanya, do you want to add to that at all?
Yeah, maybe very briefly. What's really interesting is a year and a half ago, we actually didn't really think this was important, right? All this financial and market integrity stuff. But then around COP, we started seeing much more engagement around the I4C principles, the CFTC guidelines on financial and market integrity, which are really giving the direction of travel on what are some principles for financial and market integrity. And then more recently with carbon market infrastructure players, so more industry-led effort. And these are players that are working with countries to set up their registries and their trading infrastructure. And what's really interesting on this front is there are some basics on what's the difference between a register and a registry. Once an asset is issued and starts being traded at the market, if something goes wrong, who has responsibility? There are these nuances that through this working group we're starting to discuss. And our hope is that by COP, we'll put out this roadmap, and the efforts of I4C and CFTC around the broader guidelines for financial and market integrity and the industry-led effort should hopefully bring more clarity to countries on some of these issues. Yesterday we had a carbon markets roundtable convened by Axel, our senior managing director. And what we said is, there are a lot of conceptual issues on, use case and integrity that need to be sorted out. But there's also the plumbing of carbon markets that needs to also be progressing in parallel.
Good, thank you. The good news is right now, I think you've got more tools to work with than ever before, but even having so many tools, it can get a little confusing, but thanks for that question. Let's move to the center aisle here, and then we're coming over to this side next. Okay, please.
Yeah, thank you very much. This is very useful. Kari Hämeenkoski from the Nordic Environment Finance Corporation. I've been in this market since day zero, and I'm a firm believer. But my question is about this quality and reputation. I mean, we keep hearing that CDM was so bad, and people are saying like black and white thing. It's carbon markets are horrible, and CDM was so bad. So should we try to do more about that? Maybe reanalyze, reassess also CDM, because there's a real resistance on carbon market. Even some high-level officials you hear at COP, people are saying never again because of the CDM, this sort of bad reputation, which I don't believe in myself. Thank you.
Who wants to take this one on? Please, Alex.
Yeah, I'm sure that some other panelists will have something to add, but I think that, first of all, what you said is exactly right, that it's too much of a black and white situation that we have at the moment. That's something that we really see in our research and our conversations with market actors, is that they see the nuance in the activities that they participate in. They understand how, projects that they engage in nature-based avoidance, or projects that have a community focus and provide co-benefits, those go beyond just the tons of carbon removed. At the same time, looking at some of the projects that no longer would be considered to be valid in the market, I don't think is really a useful way to examine the market currently. So, yeah, I think that as far as what needs to be done, rather than completely going back to the drawing board and reanalyzing CDM, it's to understand and have more conversations about what are the purposes of different types of carbon credits. Some types of carbon credits, it might be to deliver a removal or reduction of emissions at the absolute lowest cost that you can validate and verify and say, okay, this is completely gone from the atmosphere. Others might be about what other co-benefits are delivered and what trade-offs are acceptable to different end users in terms of trying to tell their story about the action that they themselves are financing for climate change, as well as for biodiversity, the environment, and for livelihoods around the world.
Thanks for that. I think from our dinner last night, there was also a theme coming out about why is it that in every other area of life it's okay to have learning and improvement, and in this one you're expected to be perfect the whole time. I mean, the iPhone people would not like the model that we use, right? Guy. And then we're coming over to this side. Do you have a mic yet? Okay, good. Please, Guy.
Yeah, I lived through the CDM years as well, and I think it goes back to what I said before about the concept of emissions markets is not questioned, but it's the accuracy of the credit and the quantification of that causes the concern under CDM, the additionality, and all that. And when it's used in a when a baseline and credit system, sort of to create the carbon credit, is used against a very strict target, like we had in the European, 1.6 billion tons of CDM credits were imported into the EU ETS between 2008 and 2012. That flood reduced the price quite considerably and had a lot of downstream ramifications. But as a sustainable development mechanism, as a channel of finance to do good stuff, of which carbon reductions is one aspect, it's incredibly effective. In the voluntary carbon market alone, we calculated about $36 billion had been raised in the last 10 years. 30,000 hectares of land had been put under protection. That's the size of Italy. Another 3,000 projects had been developed. Now, if you look at it in the round, and all the lives that have been improved and all that. Now, has those projects accurately quantified every single ton on every single sort of square meter? Probably not, because it's difficult to do. But as a means to channel finance from private sector into sustainable development activities, these project markets, have a lot going for them.
Great. Let's come over here.
Hi, everyone. My name's Karen. So I used to work at the Imperial College London Climate Finance Center, so I had the pleasure to host Guy came to give a talk when Stu chose research. So I'm from China. My question, I'll give my question first and then some context. So what do you think is the role of a country like China in the VCM now, like today? I think that the report for me personally is a must read to understand the global trend of carbon market, carbon pricing, but also realize, for example, the statistic about the registries, both ETS and like VCM in China, is slightly different from, I think, like for my conversations day to day from local wise. So I guess like from your with years experience in the market, what do you think China can do? I give one example like why this question where it's coming from. So I spent a year in Tsinghua University. And then there are projects right now like doing direct air capture. The cost is half of the cost of climate works. So I think that for me, like one thing for VCM is really to channel the finance for projects that cannot sell the product today, that they need additional finance through VCM to survive, to scale, like you say, direct area capture. But for me, it seems like a project like that, I think is really high quality. It's not really benefited from the current landscape structure of the VCM today. So back to my question, what do you think like the role of China, and then how you think it can play a role today in the VCM market?
Who would like to take on the China question? Please, Guy.
Sorry, I seem to be hogging the floor. I mean, China's important any way you look at it. Potentially from a cap and trade point of view, the coverage of the potential Chinese ETS is twice the size of Europe. It's about 4 billion tons of emissions coverage across power and industry. And when you actually look at a lot of the projects around the world, still quite a few on the market are Chinese-based. So afforestation, reforestation, cook stove projects. And by the sheer scale of energy use and population and land area, China occupies a large part of the global economic activity. So I think it needs to be part of the solution. I think a key thing is maintaining an equilibrium of quality across the world. So all the standards that are raising their bars, those standards need to be sort of implemented equally in every country. And I think there was questions on some of the verification bodies that were operating under the sort of the verifying some of the projects in China. And I think those have been sort of reviewed or suspended under sort of Vera. So I think China has a huge role to play, but it needs to be very integrated in terms of the best, the best standards in the world in terms of verification, monitoring, and sort of methodologies.
But really, the exciting things happening in China are more on the compliance side, right? About the possible expansion. But I was at the release of the progress report on, this was the 3rd anniversary this summer of the ETS, and really interesting observations about kind of market regulation, back to market regulation questions about using common rules for voluntary and compliance, potentially common instruments, potentially shifting targets to have both a sort of a intensity base and an absolute basis over time. So there's some real innovative discussions there, but bottom line, we need more from China and more interactions. I think the closing tidbit that's that I'm hearing more and more in the China discussions is maybe China's going to be a buyer instead of a seller in this next phase, tied to the Belt and Road. I'd love your views on that after the session maybe, but about whether that's a prospect. Every carbon conference, or I think it's every conference in China, has to be voluntarily offset now. Did not know that, but okay. Any closing remarks from the panel? Anybody got a burning final word?
I mean, maybe I just want to reiterate the very good point, Guy, that you made around the role of carbon markets to channel climate finance. And that's really, why we're in this game at the World Bank is, compliance markets have a critical role to play to reduce emissions, and carbon markets have an important role to play to channel climate finance. And, one trend that I didn't mention is, even though the market is shrinking or hasn't really picked up, we do see a flight to quality. We do see a flight towards projects that are rated by B0 and Silvera. We do see projects that have development co-benefits commanding a premium. We do see more sophisticated buyers that are engaging in actual project due diligence and some really interesting structures, advanced market commitments by serious buyers that are serious about their sustainability efforts. So ultimately, we think that the promise is to unlock finance, which needs to happen ASAP in the next 5 years to reach our 1.5-degree goals, and it's a missed opportunity if we don't look at carbon markets as an opportunity to do so and also on-ramp towards compliance.
I think we'll leave it there. Thanks, Sonia, for bringing it all together much better than I could. This is, I hope, a really useful backdrop for the discussions we're going to have in sessions throughout the next 3 days. Please join me in thanking our esteemed panelists for a great session.